Be sure to subscribe and like. Up front, let's be clear. When it comes to cryptocurrencies like Ripple, certainty is impossible. It's nearly impossible to define exactly what a cryptocurrency should be worth. It's nearly impossible to understand what drives short-term moves. Most of us are left using tools from the equity market bag, market capitalization, or chart analysis that don't snugly fit in the crypto world. But one thing we do know about Ripple is that it's been on absolute fire. As of this writing, XRP USD sits at $1.36. Even though that's down from $1.90 less than 3 weeks ago, the price still represents over 470% gains in 2021 alone. What's particularly surprising about the rally is that seemingly everything has gone wrong for Ripple, rather than right. A huge court case hangs over the company. A major holder reportedly is selling aggressively. Cryptocurrencies more broadly took a big hit last month. XRP joined in the sell-off but sharply rebounded. Even reports of a possible initial public offering for the coin's developer don't necessarily seem like good news. Yet here we are. The question is whether there's a somewhat hidden logic underneath the trading, or whether Ripple is another beneficiary of a frothy, even dangerous appetite for seemingly every altcoin out there. The simplest answer for the rise in Ripple of late is that its court case is going well. The U.S. Securities and Exchange Commission tanked XRP in December when it announced a suit against Ripple Labs, the developer of the coin, along with individual executives. The SEC claimed that Ripple Labs, in selling XRP, had engaged in an unregistered offering of securities. For its part, Ripple Labs maintained that Ripple remains a currency. XRP plunged on the news. Major exchanges including Coinbase pulled the coin from their offerings. But with the lawsuit underway, Ripple Labs seems to be scoring some wins. At the least, social media seems wildly optimistic. The timing of the XRP rally, which accelerated sharply in early April, seems to line up. That said, it's difficult to peg the court case as the only reason for the gains. Bear in mind that before the SEC lawsuit, XRP USD traded around 60 cents. Go back to October and Ripple was worth about a quarter. Meanwhile, it's also a bit early for celebration. The SEC has real power. The case has a long ways to go, and the court case isn't the only thing working against XRP at the moment. One of Ripple's biggest holders continues to sell, according to one analysis. Jet McCaleb was the co-founder and chief technology officer of Ripple Labs when the coin was developed. He's been selling 17 million to 18 million XRP each day of late, garnering over $20 million daily in the process. To be fair, this isn't like an insider or even a former insider dumping shares of a company. McCaleb since has moved on to Stellar and its coin, Stellar Lumens. The sales appear to have been going on for some time, so there's no thought that McCaleb has some confidential information about the SEC case or about Ripple Labs itself. Still, the amount of selling is material and in normal markets would at least seem to provide a break against a rally. Yet XRP has bottomed and climbed sharply even into the wave. The buying strength of the crowd simply may be enough to overcome the selling from McCaleb's account. The optimism toward the SEC case may have received some help based on comments from a key Ripple Labs shareholder. The head of SBI Holdings, Yoshitaka Kitao, said on his company's earnings call that Ripple Labs would look to go public once the case was resolved. Given that the case could in theory drag on for years, the comments suggest that Kitao believes a resolution might arrive sooner than that. It's an interesting argument as to whether a Ripple Labs IPO would be a good thing for XRP. It might draw some incremental institutional interest, but it might also highlight the core problem for crypto adherents, the centralized nature of the coin. An IPO that makes insiders rich is precisely the outcome that decentralized currencies are trying to avoid. Now, I had thought that the lawsuit might have a similar effect, as it detailed 9-figure paydays for Ripple Labs insiders. So far, crypto investors have taken Ripple's side. One of many interesting questions about the future XRP price is whether that sentiment will hold without the SEC as an opponent. Following a glut of mini victories, Ripple encounters roadblocks in its efforts to beat the SEC lawsuit. The Ripple versus SEC lawsuit has the U.S. Securities and Exchange Commission deny possession of internal documents relating to Bitcoin, Ethereum, or XRP, as they relate to securities. The Ripple versus SEC lawsuit has the SEC deny possession of internal documents relating to Bitcoin, Ethereum, or XRP, as they relate to securities. A filing on court listener reads, Ripple's defense team considers this critical to the case by establishing how the SEC determines securities classifications. Despite the SEC pushback, Judge Netburn has ruled to authorize discovery on such documents, but to the exclusion of SEC to AC communications. Both sides took this as a victory on their part. I am going to grant in large part the defendant's motion. I think that the discovery related to Bitcoin and Ether is relevant, said Netburn, adding, going to authorize discovery both as to exclusively Bitcoin or Ether communications as well as XRP communications between the SEC and third parties, and by that I am including all market participants and the other government agencies. I am not including SEC to ECA internal communications in that ruling.
Banks are asking for Bitcoin, planning to allow customers to buy, hold, and sell the digital currency through their existing accounts as soon as this year. For more details, let's bring in CNBC.com banking reporter Hugh Sun. Hugh, what had to happen behind the scenes in order for people to be able to access Bitcoin in their banks?
Hey, Kelly, nice to be with you. So there's a company called FIS, and so FIS is one of these back-end providers to banks. They actually have about 300 million checking accounts through their thousands of bank clients, and so they service their tech vendor that serves a bunch of banks. And then there's also a Bitcoin custody company called NYDIG, and they're one of the companies like sort of a Galaxy. So NYDIG has a deal with Morgan Stanley, for instance, to offer institutional funds to their wealthy clients. So you have some nascent players joining some established tech vendors. FIS is a $95 billion company market cap.
Yeah.
And they basically said, we're going to make it easy for people to actually own Bitcoin. It is, after all, a financial asset. And they've done studies that said basically, if people have the ability to own Bitcoin through their existing financial relationship, through the portal that they deal with their other money, their fiat money. Mm-hmm. If they're able to do that, you're going to have greater adoption. And so basically what they're going to have is as they turn this on, you're going to have access to clients, the customers of these community and regional banks that sign on for this. They're going to be able to go to their bank app and actually look inside their bank app and see crypto all right next to their other deposits and their savings as well.
So it's interesting, Hugh, because this raises a number of issues. I mean, number one, it's part of the bull case for owning Bitcoin, because the more that people have exposure to it, the more that you imagine that adds to the demand potential. Number two, does it undermine the success of places like the Cash App, PayPal, other platforms that have exclusively offered this in the past? It reminds me a little bit of how Zelle, the banking technology, has kind of become what Venmo once was in terms of sharing payments, although Venmo is still doing fine. So, there's a couple of big shifts that might be underway here. Just a third observation, though, is that a lot of the times you're dealing with Bitcoin, these are taxable events. If you sell it, if you use it to buy something, that's a taxable event. And I wonder, in opening this up to people, are they going to be aware of how many times using Bitcoin they're going to be facing tax problems that